Hey, how's it going, traders? This is mentfx, and this is the 14th episode of the mentfx masterclass. In this one, we're going to be taking a look at stop losses, risk to reward, and ultimately refinement in the form of how you can catch the same moves on significantly higher RRs and how you should be aiming to, of course, put down your stop losses. So we've had a video where we dealt with risk management in terms of how much you're going to be risking, how you're going to be risking it, how you're going to be divvying it up, and the way you're going to approach each one of your trades, right? What we haven't gotten into is how to place your stop loss, where to place it, and oftentimes what to wait for. Okay, so if you remember my retail versus banks video where we looked at this setup where we have this order block that forms here, continuation down, and the trade from that, ultimately, because of all the liquidity that we're taking, you should go take a look at that now because we're not going to get as deep into it right here. However, it's going to act as an example for how we can look to refine entries and create very high RR trades out of something that would have been 1 to 3, 1 to 5, or 1 to 6 originally. Okay, so if you all remember, during this analysis, we decided that we had this liquidity being formed on the top side. We finally created this trend line, and lots of people were looking to sell, especially with these resistance areas here. And then we had that quick drive through, that continuation significantly lower, leaving, of course, this main order block. And of course, we have 50% of it with imbalance around these areas, anticipating price to come up here for a sell right here to continue lower, driving out more important lows on the lower side. Okay, so generally the ultimate trade, I believe, was at about halfway of this imbalance, just like this, stop loss just above the highs. Usually your stop loss when you are trading order block should be above the highs of the order blocks, even though we understand that above any swing high or swing low lies liquidity. Understanding based on analysis, such as the fact that we are in a buy to sell model undergoing redistribution phases looking for lower prices, we understand that most highs or important swing highs will end up holding in this market. And this will be part of some future videos where we talk about this whole idea of buying the sell and the accumulation and distribution models, noticing those key areas, understanding why some order blocks hold, of course, and what lows are not going to hold and what we're going to be targeting down the line. So ultimately, we recognize that this would be that trade. And as we can see, this trade on its own right now, given that we're targeting at least these lows on a short-term time frame and then these lows on the longer time frame, is only 1 to 2. So this is what we were looking at prior. Of course, your stop loss can be a little bit more inside this, but the safest way to trade an order block stop loss is just above. Okay, but on the other hand, instead of doing something like this, you can now refine. So what you can do is you can take this entire order block and watch the inside of it on a lower time frame, looking for this exact same type of order block on a lower time frame, and understanding more concepts as you begin to as I begin to post more videos, or for the people that have already taken one-on-one courses with me, you'll notice areas of this accumulation, distribution, anticipating this price lower. And what you can do is look for a smaller version of this right here, fractally, within this area, anticipating lower prices and having enabling yourself to refine an entry from, for instance, 1 to 2 to something significantly higher. So let's take a look at how we would do that. So as price travels back up into that area, or as price begins to create this area of consolidation, of course, building that cause to go higher above liquidity to come and mitigate out of this order block before coming lower, we'd be watching this and we'd be seeing that price is just wicking in and around these areas and then finally makes its way up to this high. Now, instead of just taking this trade right here, what we could do is we could leave this on the sideline, recognizing that, you know, this would be our entire stop loss of 34 pips and this take profit of 70 just under this low, and then which is now pretty much an equal low, and then ultimately all the lows down here. So we can at maximum have this trade at about 1 to 4, okay, which is great, but we can refine this further. Okay, so if we jump on a 15-minute, we'll see that we have nothing really that important forming. We're recognizing that on a 30-minute, we're filling this last important area of imbalance on the 30-minute, and we're trading inside this major order block, right? So what we'll do is we'll jump down to the 15-minute, take a look. We have really nothing forming here. We'll take a look at it on a 5-minute, recognizing that we're starting to form that longer term version of this right here, fractally inside of here, right? With the notion of this low, consolidation. So we're going to expect that maybe we get this move down, and this continuation down, at least under these lows, right? But we don't know when that's going to happen or if it's going to happen until we come higher. So now instead of just entering this trade blindly, we can wait for a confirmation within this area. So we'll jump on a 3 minute, just take a look. Looks like we've topped out, and we're rejecting this fair value gap as we're starting to fill. So this imbalance is being filled, and we just hit about 50%, as you can see, of this order block right here. So if we just denote that very quickly, this is about 50% of it. We have just hit about 50% of it. So that's where we understand the bulk of the orders lie within an order block, okay? Now, as we start moving away from it, and we're starting to break down, we recognize all the concepts we've learned so far are starting to show themselves, right? We now have created, ultimately, so let's just go like this, recognizing we're in this big order block. Within that order block, we have now created this order block that has come up and traded lower. We have created this mitigation block, right? We've created this imbalance area, so we can expect price might want to come into here, but more importantly, we've created this breaker, right? So we had this kind of order block be created that was traded through, ultimately making this a breaker with mitigation. So we can expect that price wants to come mitigate, touch this, and then potentially continue to drop, okay? So what we can do is recognizing this. So let's play one more piece of price to see what happens. Okay, so we don't actually touch that yet, which is great. So that's about the 15-minute mark. Let's jump on the 15-minute, take a look at what's happening. So on the 15-minute now, we are rejecting off this area that we were looking at a higher time frame from. We're still not in this sell, which would have given us a 1 to 4. Instead, we're looking at this, recognizing that this is that move through the highs, grabbing that final bit of liquidity, filling in this important area, and hitting the 50% mark of this order block. And now we're continuing down, creating what we now see as a new order block and this fractal buy to sell model within here, which we're going to go over in a future video because these get very deep, and usually I reserve them right now for my students since it'll take about an hour, 2 hour video to just get through all this, and there's going to be lots of questions. That's why I kind of tailor it towards the one-on-ones. But either way, we start making these lows. We start recognizing that if anything, we want to trade from this mitigation or order block right here, because on a lower time frame that's mitigation, on this time frame it's an order block, so we can be looking for these sells. Okay, so we can already take a sell, for instance, right here with a stop loss now above this order block, because we recognize we've created a new one. So this isn't the order block that matters now for us, it's this one, right? And the idea here is this is a propulsion block, which we'll cover in the next video, but honestly it's also just an order block. Okay, so now let's say we target that exact same area right here. Right now, what we've done is we've taken a 1 to 4 trade and made it into a 1 to 12 trade. Okay, so what we'll do is we'll jump down to the 3-minute chart again, taking a look at what we have inside of here, and we will recognize that because we have formed this breaker block right here, ultimately right here, and this breaker block right here, and we can potentially enter here if we're more based on the type of traders we are. This is that 5-minute or 15-minute entry, and then on a 3-minute. We could see an entry right here potentially at this low. So we'll make it this mitigation block because we recognize this is a very small space, right? So we can enter on this mitigation block with our stop loss just above this high now, right? Because the idea is that after this order block happened, we came up to mitigate all the areas that we needed to there, hitting this mitigation, leaving just a tiny bit of imbalance that we might or might not fill, but we could assume that we're not going to, or we could come just a little bit higher than that to make sure that if it does get filled, we don't get stopped, just like that. And we could target that exact same area down below, right? So now we have 3 potential entries that we can take off this original setup. And what you'll notice is that this setup here was that 30-minute 1 to 4 setup. Now, as we've made it a 15-minute setup, which we haven't gotten into yet, we've created it into a 1 to 12 setup. And then as we got even lower onto a 3-minute fractal setup of everything that's happening with the same concepts that we've been employing and teaching thus far, we've made this a 1 to 21. Right? So the idea is we took this 1 to 4, and instead of risking 1% to make 4%, we can now, for instance, risk 0.25% to make, of course, to make 5%, right? Or if we continue to risk our 1%, this would be now 21% versus making that 4%. So you see how the return on that is 5 times greater than taking this larger trade. So even though sometimes you may have this occur and then this drop without getting ever a retest, and you could be missing this entire move, if you wait for moves like this, well, now every time you do catch it, your 1 to 21 will always pay off for that 1 to 4 you might have missed. Or if you lose this, your next 1 to 21 can easily pay off this, right? Because the idea of it is if you can catch 1 to 20 trades, then you have to lose 20 trades to ultimately break even, which isn't even happening given that we're trading institutional order flow and we're understanding why we're entering at certain areas. So we'd be looking at this area for potential entries. You could even increase the stop loss to make sure that you don't get stopped up to here, right? Making it that 1 to 12 entry. But let's say we are looking at it from a 3-minute off this fractal, looking at this imbalance. Maybe it gets filled, so maybe we get a little bit of drawdown, but we're looking to hold this area here, recognizing that we don't want to come any higher because we've already mitigated everything we need to mitigate at this mitigation, at this order block, and now we're in this fractal sell model, okay? So we come down, we still don't get an entry, we keep coming lower, okay? Keep coming lower, and we finally wick an entry right here. Again, why do we come here? Because of the mitigation. Potentially we come a little higher to fill the rest of this before dropping, but the entry was off the mitigation because we recognize that this is on a much lower time frame. So market seems to be dropping. We would be taking some profit, again, based on your own way of trading at a 1 to 5, a 1 to 10, or at the end of this, where you recognize there is liquidity here in the form of this order block. So we could be waiting to take our first entry off there. So what we'll do is we'll extend this as it comes through it, if it does, right? So still nothing, still nothing, still nothing. We'll keep extending this right now. Still nothing. Just waiting for this to hit our important area where we wanted price to return to. So we might have gotten out there preemptively just to make sure in case that it returned. Okay, there we go. So we come down, we get our first exit, and our first exit is already more than our original position, right? It's already a 1 to 10. And we're still targeting those lower areas, letting the rest of our position run on this based on that risk management video, right? So you can see how we're starting to put together all those different concepts. What we'll do is we'll zoom out now, back to the 30-minute. And what we did is we used a 30-minute setup to enter within it using the same concepts that we've used before, just on a smaller time frame, waiting for that same stuff to happen within here so we can refine that entry to a much higher risk to reward. And now we can target those same important areas on a higher time frame, right? Recognizing that price could be looking to take out all this liquidity here, right? So we could be targeting even this low right here in this order block, which is already a 1 to 40, which sounds insane, but let's continue targeting our normal area, right? So we're going to keep watching this. This 30-minute is playing out as it should. Now, let me just pause this very quickly. Let's wait to see if we can get another setup like the one we just had. Okay. Oh, so we actually did create this and then we traded through. We could look for this area right here as an order block, right? So we could look for here and look for lower prices on there. Again, our take profit actually does get hit at 1 to 23. So we're happy about that. You can either close there or you could be still running to this order block, anticipating price wants to come lower, especially with this potential order block formed here. We're not going to look at it too much, but we're just going to see what price does. The price just drops extremely hard, tapping into that block and then falling significantly lower. What you'll notice is we might have actually missed this if we were on a lower time frame. So if we actually highlight this whole block, which is ultimately right here, and get onto a 5-minute, we can look at what price did within this area. So price came into this area, coming down lower, trading a very small order block, finally coming up, creating this bigger order block, which does not get ever traded to, as you can see. Then creating this breaker block, which does get traded to very quickly, but then falls off, creating this mitigation block, which never gets traded to. Falling down through it all, creating this bigger mitigation block, okay? So this is that mitigation block that we were talking about, which is also a breaker block, okay? Because it was that order block that got traded right through. So as it got traded through here, this was actually a potential entry, okay? But seeing as this breaker block is also part of this entire move right here, our stop loss can't just be right above this high, and as you can see, that would have actually gotten stopped out. Our stop loss instead, so if we were to sell this mitigation, or let's just say the breaker, so let's just sell the mitigation actually to make sure we get into this trade, because we weren't sure about this at the time of, our stop loss would go actually above this high right here, recognizing that price could have came up higher to mitigate these areas here, right? And if you were very safe, you could actually put it even up here above this order block. But we're going to understand that we're trading this breaker right here, recognizing that this is what we wanted price to do. And we would be targeting, of course, that 1 to 2, 1 to 3, whatever your original is, right? Creating those equal lows, trading through them. Maybe you target right here for your first take profit, and then targeting down and under these. So we can see that we actually made it there and made it a little bit lower, but that's already a 1 to 6 within this entire 1 to 20, right? So you can start stacking entries just like that. And what you're doing is you're refining areas of order blocks, anticipating some areas to hold, and then seeing what price does there to refine your entry, even if it's outside of the order block, at the same concepts we've been learning so far, to create one of those refined high RR entries, right? So this is how you want to play stop losses concerning these areas of inefficiency, how you want to trade these areas of inefficiency, how you can trade them one way, which is, of course, just taking the whole setup and taking that 1 to 3, 1 to 6, and keeping it simple. Or if you're someone who wants to do the day thing and you want to see instant profits, sometimes you can hop down on lower time frames and refine every entry to the pipette using the exact same concepts we've learned from the higher time frames to the lower time frames to get into very big trades like these. Okay, so I hope this was a good video, and I hope you guys understood how high risk, high reward can be. I mean, not high risk, how refinement can lead to very high reward from some trades, but how you can also potentially keep yourself out of getting into them, right? So there was a chance that this never got mitigated at, or that you didn't even get the entry here, or that you waited for this order block to form and it never got retested, or that you traded this, or that you traded this order block and actually got stopped out, right? Now, this is not to say that every single order block is going to hold, right? We've been over this. What you have to recognize is the areas that are important and the areas where you're most likely going to see something occur. So that's how we caught this and expected it, right? And we targeted. We didn't target down here where it finally went up. We targeted, first of all, these equal lows to see that 1 to 3 return actually. And then we targeted this low right here, understanding that most of liquidity, if price was going to go lower, was going to head here. And of course, we already recognize that if we go to 30-minute right now, I do believe price does continue to drop after this area. Yes, it does. So even though price does continue to drop, is that actually the highest it comes? So it comes back up to this area. Maybe you have a potential re-entry there, right? That's that entry that you might have not gotten, comes down, and then it takes off. So there you go. It didn't continue to drop. But again, we didn't take profits at this area here. We took profits based on areas that we understood price most likely wanted to head to. And again, notice how we had this area highlighted earlier, I believe, right here. Notice how price came there. So we could have actually kept and stayed in this, but there was no proof, or we never knew that if it was going to do that. Or we could have trailed it using that aggressive stop loss method and all that other stuff that we've done and that we've talked about before. But this was ultimately the thing. You're not going to be catching 1 to 40 all the time, and you're also not going to have the emotional stability to hold it. If you do, that's amazing. That's great. You understand what you're doing. You understand what you're aiming for. The point of it is to understand that you're catching setups off higher time frames, and you can take them at 1 to 6, 1 to 4, 1 to 3, and be successful doing that. Or you can get very low and do the exact same thing, but refine it to a very, very high risk to reward ratio. Okay. Hope this video made a lot of sense. Stay posted for the next one. Please leave any questions in the comments if you have any. Leave a like if you enjoyed it, a dislike if you didn't. Just let me know why. This was mentfx. I'll see you guys in the next one. Thank you.